Hello guys, welcome back to my channel. So today I've decided to do a very deep dive into the power of three, or the CRT candle and power of three. After my first video on how to predict the next candle and how you can trade the daily range candle within 30 minutes, I've gotten a lot of feedbacks from people that they really need to understand this, how to use these two concepts, and using these two concepts warrant back to your what, to your CRT pattern. The easiest way you can use these two concepts is you mastering your what, your CRT pattern. So today I've decided to what, to drop a video on how you can what, you can trade the what, the CRT pattern, right? How you can trade the CRT pattern, right? So the video is not going to be a long one, but not going to be a long one, and it's going to be the shortest of all, where I'm going to touch everything you need to know about the CRT pattern. So if you want to know about the CRT pattern and how effective it is, then you need to watch this video to the end. And toward the end of the videos, in the videos, I'm going to be dropping some hidden gems, the key concepts you need to implement to have a what, a successful CRT pattern, and how you can master the CRT pattern. Because once you master a single candlestick, you can retire earlier from your 9 to 5 job. So without wasting much of our time, if you are here to subscribe to this YouTube channel, please do well to hit on the subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. And please do well to share this channel to your friends. Let benefit. Remember, trading should be what, should be fun. So when we talk about CRT pattern in this video, this is what you're going to learn. We're talking about the CRT pattern, the candle rate theory, which we know as the CRT pattern, the power of three, how you can use the CRT pattern and the power of three together to have an effective trading setup and a very profitable one without risking much. Then I'm going to talk about how smart money uses the power of three to trap retail traders. It's not about you just knowing the power of three or knowing your CRT. You need to understand the what, the other side of the game, which is the what, the market maker, how they use these things to favor themselves and what, to unfavor the retail trader with the retail trader. So once you get to know their move, that's what we call that. You need to know the pros and the cons of what, of the setup you are trading. You need to know the pros and the cons of it. So I'm going to be telling you how to predict the smart money move before the what, they happen, using your CRT pattern. And I'm going to talk about extensively on the what, the candle rate theory patterns that we have and how you can use them. I'm going to talk about the what, the time frame breakdown for CRT pattern. One thing with CRT pattern is that your CRT pattern cannot just stand alone. You need to implement your what, your time frames. And that's why I keep telling you, if you are on my what, on my channel, or you are in my what, on my inner circle, I've always said that what, the only thing you need to know in this market is what, is your time and price. If there's anything you want to learn, learn time and price. Because when you learn time and price, the two must align, and that is one thing CRT pattern did that makes it a what, a very profitable one, very very profitable. Honestly speaking, you've got to see the result I'll be posting on my channel and on my status. That is just the power of what? The power of CRT pattern. Then I'm going to talk about the key times for high profitable setup, CRT setups. We'll talk about the practical example of trading high probability CRT pattern. So if you want to learn, if this matches with your what, your motives, your objectives, then you need to watch this video. Grab a book and your pen and your notepad and make sure you follow along the line. Every seconds of the video counts. Every seconds of the video counts. So every seconds of the video counts. So when we talk about candle rate pattern is just a three-bar candlestick pattern. We can call it a three-bar candlestick pattern. So we'll call it a swing eye. It is still the same thing, but it's not about knowing the name. You need to understand the psychology behind this pattern. It is not just an ordinary pattern. Let me put it that way. It is not ordinary pattern. So when we talk about candle rate pattern, candle rate theory is built on a simple yet profound idea. Every candlestick on a chart reflects a range of price actions. This candle represents the broader market movement. This is what you need to understand. This is what you need to understand. Every candlestick you are seeing on your chart represents a range. So the moment you understand, and that's one thing with CRT pattern, you are trading a range, but you are not just trading an ordinary range, you are trading a range that matter. So that's one thing about the candlestick, the candle rate theory. That's your candle rate theory. So that's one thing with your candle rate theory, right? So here is what you need to know. Every candlestick has a high and a low. Take note of it. I've talked about it extensively that what every candlestick, as a matter of fact, there are four key things you need to know about a candlestick. Once you know these four things and you know the pros and cons of the four things, I'll keep telling you the pros and cons of it, because normally it is what all of us know, but majority of us does not know the pros and the cons of it, and that is why this thing have been eating us hard in the market. So you need to know the pros and cons of what every candlestick. Remember, every candlestick is the range, and once every candlestick, there are things very common. Every candlestick has an high and a low. So as you zoom into a lower time frame, this range becomes a clearer and forms the basic of what? Of your CRT pattern. Remember, if you are taking this CRT pattern, it has to come from a higher time frame. And once you have it on a higher time frame, at a key level, remember what? Know that what? At a key level, not just forming at what? At a higher time frame. It has to form at a key level, and at a key time. Know the two. It has to form at a key level and at a key time. So once you implement these two things, automatically your setup is going to be a numerous one, a profitable one. What you need to know. So this is your what? This is your CRT pattern. Every candlestick has a what? Has a high and a low, irrespective of whether it's a bullish candlestick or a what? Or a bearish candlestick. It has a high and a low, and that is what you need to what? To know when you are coming into the market. Right. So the power of three, we have the manipulation, the distribution, the accumulation. Right. We have the power of three. It is what? Manipulation, distribution, and accumulation. So one thing you need to understand. Now let me go back to the what? The candle that I gave you, the CRT pattern. So as a matter of fact, remember we have the power of three. I said is what? AMD. What? AMD. This is your accumulation, this is your manipulation, and this is your what? Your distribution. We all know power of three, but we don't know how to represent. We don't know the psychology behind it. I'm going to be doing a deep dive on what? On CRT pattern and your power of three. The moment you understand your CRT pattern, I can tell you that you can retire your 9 to 5 job earlier. You just need one CRT candle and you can master just one CRT candle and you can retire your what? From your 9 to 5 jobs. From your 9 to 5 jobs. So that's one thing. If you have anything you want me to talk about in the video, please drop in the comment sections and I will definitely respond to it. So let's move on. So we have the power of three. The power of three is just your what? It's just a psychology that tells you what we have three faces of what? Of every candlestick. Every candlestick has its own power of three, irrespective of the time frame. A 1 minute time frame, a 1 minute candle has its own power of three, and you can trade it. A 5 minute candle has its own power of three, and you can trade it. You just need to understand the what? The psychology behind it, know your accumulation, know your manipulation, and you trade your distribution, you will be profitable. A 15 minute candle still have its own power of three. So these are the things you need to what? You need to know. Right, so that's your power of three. Then a practical example of it is this. Now, this is the accumulation. If you want to talk about the accumulation phase is just the what? The phase whereby you have a market. The market is in what? We call it consolidation. It's just going up and down, trying to what? They are building contracts. They are building contracts, trying to what? To trap retail traders. There is not going to be a unique range just moving from what? From an up and down. This is what we call an accumulation. You can see they are not breaking the high, they are not breaking the low. So you at this particular time, you know that you need to be patient, wait for the market to move from accumulation. And once they move from accumulation, the next thing they will do is they will go down to your what? To your manipulation. And this is where you start seeing things. This is where you start seeing things. After the accumulation comes the manipulation, like I told you. After the accumulation comes the manipulation. So the manipulation phase, this is the critical part of it. The manipulation phase is just the market moving in a wrong direction. If let's say for example, if you are bullish, let's say you are bullish, This is going to be accumulation. After this accumulation, the next thing market maker will do is that they will give you a what? A what? A sell. They what? They will give you a sell. The sell now is to what? Remember that they've trapped a lot of traders. They have a lot of stop loss here, a lot of stop loss here, a lot of stop loss here. So the next thing they will do is that what? You can see this is what we call an equal low. This is showing there's what? There's liquidity here. So the first liquidity the market maker need to grab in the accumulation phase is what? Is the manipulation phase liquidity. So once they go, if they want to buy, they need to sell first. So once they sell down. They are not just selling, they are pushing the price down, selling to a key level on higher time frame. Put it in what? Quote this thing, they are selling to a what? To an higher time frame key level. An higher time frame what? Key level. So it's not about you just saying, okay, they want to sell, probably they have a what? An order block here. What? An higher time frame order block or an higher time frame swing low here. Rejected low. So they'll set the market here. This is your manipulation. After the manipulation, you can see a sharp move. They will never stay long in manipulation state. They will never stay long. Within 1 minute, 2 minutes, they've done the damage they want to do. And what? Instantly you start seeing price pushing up. So this is example of it. Look at it there. After this one, this is our manipulation. You can see they are not breaking, they are not breaking. What they did, they sell and took out the what? The liquidity here. Look at your manipulation here. This is your manipulation, right? You can see that after they did this, they closed back inside the range. The next thing they will do your entry is going to be after this other block here. Once they close above it, this is your what? This is your manipulation. And after the manipulation phase, we have the what? The distribution phase. Your distribution phase is the phase you want to be trading. This is the phase you need to capitalize on and trade. This is the phase you need to capitalize on and trade. So your distribution phase is just whereby you start seeing sharp moves, very sharp moves. They don't waste time. As a matter of fact, the damage they've done here, the damage they might stay here for like 2, 3, 4, 5 hours, 15 minutes, 20 minutes. They can stay in accumulation, but within 5 minutes, you see the distribution. You yourself know that no, the market makers are in the market already. Because once they are there, you will see them. If they are not there, it is going to be very crystal clear that they are not in the market. So you want to capitalize on distribution phase, and this is the phase you need to master how to what, how to what, how to set it, and how you can what, you can capitalize on it. So moving on, so we have the what, how smart money uses the three market phases to trap the what, the retreat traders. That's just what I've actually explained. That what, we have three phases in the market, which is going to be your what, your accumulation, manipulation, and distribution. So the accumulation phase, they use this in what, in trapping, in grabbing orders. Is going to be consolidation. There's one thing many people don't understand about this consolidation. Your consolidation can be Your consolidation can be in two forms. Your consolidation can be in what? Can be in two forms. If you want me to tell you, if you want me to talk about the hidden gems in your accumulation, then drop in the comment section the hidden gems in accumulation. I'm going to be talk. Many people when we talk about accumulation, many people will just be looking towards to swing high, swing low, swing up and down. Manipulation, accumulation is more than this. Accumulation is more than this. So you want me to talk about in my next video the hidden gem in how you can spot your accumulation range, and once you can spot your accumulation range, automatically your manipulation will not be a problem. The problem people have with power of three is that they can't identify the accumulation. They don't even know where the accumulation is. So question of how did they want to know that okay, we are in accumulation phase, then we are moving towards the manipulation phase. So if you want me to talk about the power of three extensively, then drop in the comment section power of three, and I'm going to be what to respond to it. So moving on, so that's how the market maker uses the power of three. So we have the accumulation, the manipulation, and the distribution. So this is these are the three phases of the market maker. Right? These are the three phases of just like what I've said earlier. So we have the accumulation, we have the accumulation. So we have the accumulation phases. They just trap the traps order, then we have the what the so This is the a candlestick representation of the what? The power of three. So this is where we start talking about our what? Our CRT pattern. This is where we start talking about our CRT pattern. So the CRT pattern now, we have the what? The so we have the accumulation phase. We have the accumulation phase. So the accumulation phase is going to be the first thing you will see in your CRT pattern. It's going to be the first thing you are going to see in your CRT pattern. Your accumulation range is the first thing. So after the accumulation, and that is what we take as a what? As our CRT. So it's the one you are going to be marking the high and the low. So the high of it is your CRT high. The low of it is your CRT what? Your CRT low. So this is the range you are marking. This is the range you are marking. So once you have the accumulation, you can see this is the accumulation. When you be like, this is the distribution, the volume here is more. This is what you don't understand. When it comes to CRT pattern, you need to understand this is the accumulation. Then after the accumulation comes the what? Your manipulation. Your manipulation is always going to be your second candle, your CRT pattern. Remember, your CRT pattern is what? It's a 3-bar pattern, a 3 candlestick pattern. So your second candle will always be your manipulation. And once you have this, now let me tell you the what the hidden gem is this. So you have this what? This is the what? This is the bearish candle. Expectedly, you expect the next candle that will form after this candle should be bearish too and should close below it. Remember my first video on how you can predict the candlestick, the daily time frame. Remember that when you have a candlestick that close back inside the range of the previous candle, that is telling you that what? A reversal is about to happen. So at this particular time now, you need to what? This is your sales, this is your manipulation. Once you have this candle that close back inside this is telling you that what? You are having a reversal, that we are in an uptrend. So this is what the manipulation phase does for you. So this is what the manipulation phase does for you. So you need to understand the candlestick, not just knowing them. So you have the what? You have the distribution phase. Look at it here now. This is distribution. You have the other one was in forms of what? A bullish market. Now this is going to be in forms of what? Of a bearish market. Remember, I told you your accumulation stage is the stage you are marking as your range. This is where many people get it wrong. They say, no, no. Your accumulation phase is your range, and that's your dealing range. That is the range you are trading in. So you mark the high and the low of it. Look at it here. The first is in case this candle came here. They grab the liquidity here. There was liquidity here. They grab the liquidity and close back inside the range. This is telling you what? A reversal is about to happen. You can see the next candle. What happened there? They open and what? And take out the what? The low of the what? Of our range. This particular candle alone can, if you can learn how to spot it, master the way you spot it, is can master this particular candle alone can make sure you can make you retire from your 9 to 5 job without in a short period of time. You just need to master the process. So this is your so let me show you on the chart. So this is a practical example of it. So you have the what? You have your CRT candle. This is your high and this is your what? This is from higher time frame. This is from your what? From higher time frame. So this is your high, this is your low. This is your CRT, this red candle. This red candle is your CRT candle. This is the high, this is the low. Now remember I told you your CRT pattern has to form in a key level. Now the key level we have here is this our fair value gap here. This our fair value gap. This is the key level that we have. So you have this. So automatically you expect the next candle. So once you spot it, this is 1 hour time frame. You go down to a lower time frame. You need to see a lower time frame CRT pattern on the lower time frame you are using. This is another place where people get it wrong. Once they see the lower, once they see the what, once they see the CRT candle on the higher time frame, they just go down to lower time frame and started trading. You can't trade it on that particular time frame. You need to go down to a lower time frame, and that is what is going to bring out. When I'm going to be showing you how you can align the time frames together, because you can't be trading a 1 hour time frame, 1 hour CRT candle on what? On a 4 hour candle or a 30 minutes time frame. You are trading nonsense. It is nonsense you are trading, sorry. You can't be profitable. You just end up to be the liquidity. The liquidity you want to grab, you end up being the liquidity. You end up being the one supplying the liquidity for us to grab. It's very deep. Yes. So once you either bid the liquidity or you grab the liquidity. So that is your what? That is your CRT. So you go down to your what? To a lower time frame. Once you are in a key what? A key level. So I want to so you are trading the 1 hour CRT pattern, you go down to your what? To your 15-minute time frame. Like the lower time frame you be using is your 15-minute time frame, and you can see this is the high. So we expect the market to what? To form. Look at it, the same thing you have on your 1 hour time frame is what you have on your 15-minute time. Look at this candlestick, it rejected. So this alone is telling you that what? You are bearish. So once when I get to enter, I'm going to explain how you can enter. But automatically, this is a bearish candle. So once you have a bullish candle that closes above it, your entry is going to be the open one of this bullish candle, bearish candle. Your stop loss is going to be below, and you can target the what? The 50% of the QRT range, or you target the what? The high of it, right? You target the high of it. But sometimes you need to just focus on this. Look at this. This is your what? Internal liquidity. They took out external liquidity here. So this is your what? Your internal liquidity. Remember, market move from what? Internal to external, external to internal. So that is the what? That is what you need to understand in the market. So you have the what? You have the 15-minute time frame, and you can see what we have here. So it's training what? You have this. This is your CRT pattern, and you what? This your entry is going to be here, just like I've explained. The entry is going to be here. You have a confirmation since this candle closes above this what? This last bearish candle. So it's telling you that what? You move from what? From a bearish market to a bullish market. So your entry is going to be the what? The open of the next candle. And you can see how we do it. Remember I told you, you can see it. So you have this what? This is an internal liquidity. So you not just target the what? The high. Once you have a what? Something to support your take profit. So that's your CRT pattern. So moving on, we're going to the CRT patterns and type. So we have three CRT patterns. We have the standard three candle CRT pattern. We have the standard CRT pattern, it's just a three bar pattern. Then we have the what? The inside bar pattern. So the inside pattern is not going to be a three candles. It can be four, it can be five. It depends. It depends. So this is the what? This is the so moving on, we're going to the time frame and breakdown for CRT pattern. Like I told you can't just trade the CRT blindly. You need to align it with time frames. CRT is just a particular strategy that works with time and price. So if you are not getting your time right or you are not getting your price right, automatically you are trading nonsense. You are trading, and once you are trading nonsense, you can't be profitable. That's just the simple truth. So so here is what the time frame breakdown for your CRT pattern. So when you spot a CRT pattern on higher time frame, you don't just stop there. I told you earlier, you zoom into a lower time frame to find your entry point and make sure your timing is spot on. Your timing is spot on at a particular time. Mark this, take note of this. So if you are working with the daily time frame, if you are trading the daily, if you want to trade the daily CRT, then you need to go the lower time frame you're working with is going to be your hourly chart. If you are trading the 4 hour time frame, your time frame the lower time frame you're going to work with is going to be your 30 minutes. Many people make mistake on this and say, no, 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 you need to go down to 1 hour time frame, you go down to 15 minute time frame. No, you are trading nonsense. You work with what? Your 30-minute time frame. Based on what I've practicalized from my back testing, I've seen that the 30-minute time frame tends to work more with 4 hours time frame rather than the 15-minute time frame. So if you are working with hourly time frame or you are using the 1 hour CRT pattern, then you need to be using the what? The 15-minute pattern. This is what we call divided by four. They divided by four rows. That is a time frame you are using. The higher time frame you are using must be times four. The lower time frame of the times four of the lower time frame is what will give the higher time frame, right? Times four of it. 15 times 4 will give you 1 hour. So 15-minute candle, you use your what? Your 1 minute time frame. So this is going to be for a what? For a swing trader. This is going to be for a what? For an intraday trader. This is going to be for a scalper or an intraday trader too. And can be for what? Basically a scalper. So I wouldn't advise this if you have not really mastered and done from what this is for professionals. This is for what? For professionals. So that is your time frame alignment. So moving from there, from our time frame, we go down to what? To our time, right? So this is example of it. So this is a 4 hours CRT pattern. So this is your 4 hour CRT pattern. This is your what? This is your CRT high and this is your CRT low. So moving on all this here, this is going to be a what? A CRT pattern. So you have the what? So we have the what? The key time frames now. So we have the what? The key time frame. So key time for high probability CRT. Important note, you need to understand that timing is just a crucial as spotting the setup itself. Timing is very very important the same way the setup is important. Not all CRT are created equally. You need to know this. It is not all CRT that are created equally. No. One of the biggest factor that separate a winning trade from a losing one is when you catch it at the right time. This is very very crucial. So for forex traders, you have the timing. So we have the forex traders and we have the future traders. So for the forex trader, you need to be working with your watch. You have the 1 a.m. CRT pattern, we have the 5 a.m. CRT pattern, we have the 9 a.m. CRT pattern, we have the 1 p.m. CRT pattern, and we have the 5 p.m. CRT pattern, and we have the 9 p.m. CRT pattern. So for future traders, it's going to be 2 a.m., 6 a.m., 10 a.m., 2 p.m., and 6 p.m. and 10 p.m. So the only difference there is that what? The future traders, so these are what? These are your the future traders are your NASDAQ, S&Ps, your indices, these are the future traders. But for forex, your normal gold, your GBP, your USD, your boom and crash, your volatility 75, these are the time frames that work with them. Right. So this UTC is always going to be your what? Your Eastern Standard Time. So you need to what? You need to convert it to your what? Your Eastern Standard Time. Convert the Eastern Standard Time to your local time. This is when you know what exactly what I use. So many people have problem in converting these things. So if you want me to create an extensive video and how you can convert this time frame to your local time, drop in the comment section. Convert 1 a.m. Eastern Time to my local time. I'm going to watch and let me know the area. Let me know the let me know where you are chatting from or where you are commenting, where you are watching from. Right. So just type in 1 a.m. in London, 1 a.m. in Egypt, 1 a.m. in Dubai. Just let me know the location you are working with. I'm going to convert it for you. Right. So this is coming to an end. This is what you need to know about the CRT pattern. So let me show you one practical example of it. Let me show you one practical example of it. Right. So, so like I was saying, this is a practical example of it, the CRT pattern. This is my 9 a.m. CRT. My what? This is my 1 a.m. CRT pattern, right? This is my 1 a.m. CRT pattern here, right? So you can see this is my trade history here. This is my what? This is my entry here. This is 5 minute time frame. This is my CRT. They took out this eye. My target entry was here, but this is a what? A 1 hour what? CRT pattern. So that was why I went and closed my entry here. My closing point was here and around this, right? So you can see it is clearly, you can see they took out this what? They are coming to this higher. Let me show you the key level here from 15-minute time frame. Let me show you your key level here. So if you want to know more about this CRT pattern, please kindly hit on the subscribe button and turn on the bell notification. Please do well to share this video, recommend it to your friends, let them benefit from it too. So this is okay, let me show you. Okay, so you have the 1 hour time frame here. You can see this is the CRT pattern. You can see we have this, right? We have this, they close above it, and that was why my entry was here. This is my what? My key time frame. Return back to an order block here. On 4 hours time frame, I have my order block here. I actually did a video on this particular one, so you'll get it in the link. It's where I'm going to drop in the live video of this live trade on the video description of this and at the end of the video. So you can do it to watch on that video to understand it and see the way I do it live. So meanwhile, if you really appreciate this video and it's of benefit to you, please hit on that like button and please do well to share with your friends to let them benefit. So remember that this is an easy gym. This is something I will have charged hundreds of dollars for. just to teach you. I'm taking my time to teach you for free. So please do well to appreciate my effort if it's actually beneficial to you by hitting on the subscribe button, like it, comment and what I share with your friend. Until the next time I'm going to be coming into your way, please remain what? Remain profitable.